heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde of Bloomberg's World Headquarters in New York. Ed Ludlow, he's off today. This is Bloomberg Technology. Coming up, Microsoft and Activision, they extend their deadline for closing that $69 billion deal as they seek approval in the United Kingdom. We've got the latest. Plus, streaming giant Netflix reporting earnings later today. How has the password crackdown impacted the business? And what does strikes in Hollywood mean for the company? And we'll sit down with the CEO of Weight Watchers. We're going to discuss the company embracing technological advances in medicine to support its business. All that and so much more to come. But first, let's check in on those markets. And it's a day of green. Abigail Doolittle has it all.
It certainly is a day of green, Caroline. This year's melt-up continues. We have the S&P 500 up for a third day. The NASDAQ 100 is higher. We also have the NYSE FANG index, some of those big mega-cap tech stocks, including China Tech, which is outperforming, not on our board, but up more than 2%. So the stock bulls remain in control as we start to move through earnings season. And of course, the financials overall have reported well. Carvana, their results came out. That stock is absolutely soaring. Right now, it's up about 43%. They beat estimates both for adjusted earnings in terms of a narrower loss than expected revenues. So this online car platform, which earlier this year had been a sub $5 stock, now up more than 1,000%. Some of this positive attitude also has to do with restructuring their debt. The question is, as the other big tech companies roll in, and this is not a big tech company, but as the big tech company earnings roll in, you're mentioning Netflix, this stock up about 61%. Will investors deem those earnings to be big enough, robust enough to support the moves? Because Netflix on the year up 61%. We have Meta, Amazon up about an equal amount, Microsoft and Apple as well. Yet, if I take a look at how much revenue is growing for Netflix, it's expected to grow mid-single digits. Same deal for Amazon and Microsoft. Apple, Caroline, it's actually expected for its June quarter revenue to decline by more than 1%. So it's going to be interesting to see whether these quarters come in where they're expected, what the outlooks are. Will we see this stock rally continue based on the results that come through?
All bated breath for those big names later after the bell. Abigail, thank you so much. Let's get more updates, though, on, well, the grinding story that is Microsoft and Activision. The deal, we understand the extension in the deadline has been given for 3 months to get this deal done. There's also updates to the changes in which termination could be, $3.5 billion if indeed they do walk away in those 3 months' time. Let's get over to Catherine Gamel, I'm pleased to say, who has been really thinking about why this ultimate deadline that was meant to be July the 18th has been extended, and it's because of UK regulators, correct?
Yeah, exactly. Thanks so much for having me on. So today we've seen that this deadline has officially been extended by the companies. I mean, this was expected, and Bloomberg reported earlier in the week that this will be the case. And this is really just so that the companies can get over the UK hurdles. So the UK's Competition and Markets Authority is the only agency that's standing in the way of this deal closing at the moment. And last week we saw them put out a statement that would say that they're going to reconsider some structural remedies for the companies after the FTC's defeat in court. Since then we've had quite a lot of updates, a big flurry. We've seen them extend their deal probe till the end of August the 29th, and then to also clarify that if they are being offered a restructured deal, that that this will go to a fresh probe. So that it can give both sides time to renegotiate and really thrash out the details on this one.
Shareholders might be a bit pleased, of course. Two companies agreeing that Activision can issue a one-time dividend of up to 99 cents to its shareholders before that deal closes. Of course, regular dividends had been put on ice prior to this. But it's so notable how the mood music has shifted, not only after the FTC failed to get the deal put on ice here in the United States, but what an about turn to occur in the United Kingdom. We are expecting more changes to the business model, but ultimately anything that could still stand in the way, because Phil Spencer of Microsoft sounding pretty upbeat.
Yeah, it seems like the companies are both feeling pretty confident about this one. I mean, I would just caution that the CMA still needs to consider these remedies and see, whether it will address the competition concerns. At the heart of the reason behind the CMA's first veto, I mean, Bloomberg News last week reported that there's considerations of offering up some of Microsoft's UK cloud business. We don't know yet if that's actually going to be officially offered. Right now, the negotiations are still at an early stage, and on Monday, they will have just kicked off after that because we got a pause of the UK CMA's and the Microsoft's appeals proceedings at the Competition Appeal Tribunal.
We want to thank you, Catherine. Thank you so much, Catherine Gamal, on all things Microsoft and Activision. Let's get on to Netflix as well, of course, which once upon a time was talking about how gaming was its key competitor. Of course, it's going to be reporting earnings today after the bell. I'm pleased to say that Bloomberg's media and entertainment correspondent Chris Palmieri is standing by in LA. And first, well, we are expecting subscriptions to pick up. It's all about that password crackdown.
Yeah, I think the street is looking at about a 2 million subscriber addition this quarter. That's about the same as last quarter, not as big as the blowout one we saw in the last quarter of 2022, but much better than the losses they had at the start of last year. So there is a general feeling that Netflix has figured this out with the new cheaper ad tier, with the crackdown on passwords, that they're resuming growth again.
And within this context, I'm still trying to understand whether a strike among actors, among writers, is going to be difficult for Netflix because they don't have live sport. But is it a boon? Because we know how much Netflix has got in terms of content in the back office.
I would say the street, given that you noted a 61% increase in the price this year, thinks that they're going to weather this strike. The company's line has been that they have this content pipeline that's all set, and they'll be able to go through the end of the year at least. We'll be looking for any updates on the call today to see if their position on that has changed. You could certainly make the case that people will be spending a lot more time just streaming older shows and spending more time watching Netflix if new programs aren't on the air in the fall. So there is that dynamic.
Chris Palmieri is going to be glued to the screens when those numbers drop. As always, we thank you, the big bellwether for the start of earnings in tech. Let's get to the other key big bellwether. It's the biggest traded company here in the US, Apple, of course, coming out with breaking news that we understand that Apple is indeed racing to develop its own generative AI tools to catch up with OpenAI. Now, according to Bloomberg, the sources are saying it's building a large language model AI framework dubbed Ajax. It's created internal ChatGPT-style bot for employees already. What's notable is this is helping NVIDIA's share price. It's quickly turned positive, up more than 0.4% because, of course, what do they need? Compute power. On the downside, interestingly, Microsoft is falling to session lows, down by about, as you'll see, currently off by 0.3%. They were off at 0.8% a little bit earlier because this is competition, folks. If they're seeking to take on OpenAI and indeed Bing, it'll be a great conversation to have with a Microsoft executive we've got coming up later in the show. But first, we're going to be talking about the growing market for connected weight loss apps and the drugs you can buy on them. We'll discuss that more with the CEO of WW International, aka Weight Watchers. That's next. This is Bloomberg. Apple shares at a new record high. Why? Well, reporting coming from our own Mark Gurman that Apple is quietly working on an artificial intelligence tools that could challenge those of OpenAI, of Google's Bard, of course. This is all to do with generative AI, the only thing we can really talk about here on Bloomberg Technology. It's releasing, we understand, but there's no real clear strategy for the technology getting into the hands of consumers. What we do understand is the iPhone maker has built its own framework to create large language models, an AI-based system at the heart of the offering. We understand, of course, is called Ajax. It's going to take on Bard, going to take on ChatGPT. And in fact, they've already created a chatbot service that some engineers called Apple GPT for their own internal employees. But in recent months, this AI push has become a major effort for Apple. Notable that, of course, Tim Cook hasn't discussed it. We were all waiting to see whether he did it at the Worldwide Developers Conference a month ago. We'll see as to whether, of course, it starts to factor in their earnings calls. As we know, anyone can talk about in those earnings things like AI. But we know that Apple has woven AI features into products for years, and now it's trying to play a little bit of catch up in what is an ever more buzzy market for generative tools overall. But we'll see whether people can be creating essays, images, video. I want to shine a light on what's happening in competitors. Microsoft, of course, which has evolved the OpenAI relationship to become one that's really integrated within Bing, within Microsoft Copilot 365. We'll be discussing that in a moment with an executive, but it's down some 0.7% as we talk about this new potential competition. Apple up more than 2% and a new record. And even NVIDIA, of course, the big compute power is on the higher side because of this. Let's get to the man that broke this story. Mark Gurman, I'm pleased to say, is on the phone. And I mean, some real digging here. We were all waiting for Apple to weigh in on AI.
And here we are. I'm told that Apple is quietly working on a set of new generative AI tools with the idea of catching up to OpenAI, Google, Microsoft, Amazon, everyone you've seen entering this buzzy new AI space recently. Two pieces of information here. One, they've created an underlying framework to create large language models, or LLMs. That's the tech at the heart of ChatGPT and Google Bard, Bing AI, these other services. Apple's internal framework, it's called Ajax. Now, on top of that framework, or with that framework, they've also created an internal ChatGPT-like system that some people in Apple call Apple GPT that works similarly to ChatGPT that we know today. So clearly, Apple is all in on LLMs. They have multiple teams working on this. The big caveat at this point, though, is they do not have a clear strategy for consumers yet, but the work is happening and they'll get there eventually.
Many have perhaps grinded their teeth with frustration at Siri. That seems an obvious area that generative AI could improve. Where else, though, could consumers interact with anything that Apple would offer?
Yeah, in terms of generative AI, you can see this across all platforms. You can see this across many applications. There are places where this could be used in productivity apps, let's say in Apple's spreadsheet or word processing or slide presentation apps. You can have a generative AI system theoretically to help you build those presentations and get work done for you. Like you said, you can see it happen in Siri, a more chatbot-like interface with improved data based on what it's trained with. An improved back and forth, so to speak, or more information able to come in a more clear form into Siri. You can see it in terms of app development, right? Even on a place like the Vision Pro headset, where you don't necessarily have a keyboard and mouse at all times, and you're going to want an artificial intelligence system to give you a leg up on development when you don't have those standard input methods. So there's all sorts of places where generative AI can be placed. Apple's hiring for people in the language model space. They're looking for people who can apply generative AI to help people communicate, create, connect, and consume media, the company says in some job listings. So they're all in on this. While Apple doesn't have a definitive plan yet, people involved in these projects believe that Apple is preparing to make some sort of major AI announcement sometime as early as next year.
Wow, Mark Gurman, always with the latest and breaking when it comes to Apple. Thanks so much for quickly jumping on the phone with us. Meanwhile, well, let's turn to a company that's become ever more technologically native. In fact, they've hired a previous Silicon Valley star, Weight Watchers, of course, known as WW International. In this week's Bloomberg Business Week is part of, well, the cover story. It's all about the 60-year-old company and its bet on pharmaceuticals as the next frontier for innovation in the weight loss space. In a bid to keep up with the times, now let's discuss all of this. We're pleased to welcome the CEO, Seema Sistani, who joins us now. And Seema, you were building House Party. You were deeply within the tech space, building companies, selling them, innovating. Your job now is to innovate at Weight Watchers. And part of that is making acquisitions in the telehealth space. Just talk to us about how this key acquisition is helping you drive forward with pharmaceuticals.
Yes, thank you for having me. So coming in as CEO, what is just a year and change now, I knew part of the vision was about rethinking the business from a digital first perspective. One based on community, which is, as you mentioned, where I've spent most of my career in growth tech doing. I had first experience as a member on the program. And so I was really excited about bringing something new and fresh to the product on a global scale, and something that would allow me to take all my growth tech experience, and knowledge, and then have meaningful outcomes for global health. So anyways, I had been looking at this research on blue zones and how to create a digital blue zone, and we investigated new modalities, both across functional and clinical. And what stood out most is that obesity is a chronic condition. It still hasn't been addressed truly in that manner, when in fact, for over 10 years, it's been scientifically recognized as a chronic condition. And so we wanted to enter the space and be able to extend our toolkit to not only behavior change and functional, but also clinical interventions.
What's so interesting is yesterday we learned that another tech executive, social media tech executive, Jeff Cook, is joining Noom, which is a kind of competitor, which is also in the weight loss startup transition, prescribing obesity drugs. How do you compete? How do you stand out? How do you make sure that your loyal following doesn't become disenchanted by this shift?
Well, I mean, I think that there are two questions in there, and the first one that I want to address is the prevalence, of obesity in the U.S. Take, for instance, since 1993, the prevalence was about 13%, and now we're talking 42% prevalence, and the trajectory is going to get us to 50% prevalence of people living with obesity by 2030. So this is a matter of rising tides lift all ships. We are, as the leaders in the space, wanting to make sure that this is something that we can address globally and that we're doing it responsibly. And yes, certainly there have been members who we have to bring along in the journey. And it's on us to really destigmatize this category, and people understand that it's not just about willpower for many. It's not a moral failing, that this is a chronic relapsing condition, and in some cases requires a clinical intervention for people to see long-term success and longevity.
Talk to us about any program you might launch, whether or not it's through Sequence that people manage to access these obesity drugs, whether it's somewhere else. You're sort of trying to build a program, as I understand it, to do with this acquisition that helps people build a lifestyle. How many people do you think would ultimately sign on? When might we see such a launch, and how?
Sure. Well, yeah, I think it's important to remind people that the medications, and particularly the clinical trial, it was called STEP, that really led to the media being excited and the zeitgeist shifting to thinking about these medications. This was a trial that was run alongside lifestyle treatment, meaning that these patients were receiving guidance on diet and activity. They were done in conjunction with a calorie deficit. And so it's a misconception that these are a magic pill that you just take and lose weight. You must do them alongside lifestyle intervention. And that's what the medications help you do, is have greater adherence to the healthy habits that come naturally to some. And so what we are developing alongside of our tried and true #1 doctor recommended program for behavior change is one that is very specific to people who are on the GLP-1 journey, because they need help with maintenance of lean muscle mass, nutrient density, and doing so alongside of the titration, the dosage titration is going to be really important to achieving the best outcomes. And so we plan to introduce this program in the fall. And that would be for people who get the medications through our virtual clinic Sequence or not. So if you are somebody who's gotten the medication through your healthcare provider, these providers in a lot of cases are not trained in obesity medication. Less than 1% of doctors are. And so this will be a program that will be able to have a higher touch support for those people.
Fascinating innovations. We'd love you to come back and talk about it a little bit longer next time. We thank you for your time. Weight Watchers CEO, Seema Sistani, as it's known as WW International, with its ticker. From New York, this is Bloomberg Technology. Time now for work shifting, where we look at the changing landscape of the labor market amid advances in technology. And we've got to talk about AI. We've got to talk about Microsoft's new artificial intelligence tools for its office software. Microsoft 365 Copilot. It's going to cost you $30 a month if you want to use it, on top of what most business customers already pay, What are you getting in terms of that value? Microsoft Vice President and Modern Life Devices Group, Yusuf Mehdi, is with us. I'm so pleased to welcome you back, Yusuf, to the show. And Bing Chat Enterprise, whether it's being more specific with your data and ensuring that it's safe, and also Copilot, what are you offering here that's distinct?
Hi, Caroline. First off, great to see you again. Great to continue the conversation from our launch back in February. The big thing that we're announcing really yesterday is, I think, probably arguably the biggest thing that's going to happen in AI in the next 12 months, and that is that we're unlocking the ability for people at work to be able to use generative AI to help them in their jobs. Up to this point, people have not used it because of concerns of their data leaking out of the organization. All that changes now with the launch of Bing Chat Enterprise and Microsoft 365 Copilot.
Ultimately, what has the demand been like? I mean, we heard from executives that they were sort of inundated with CEOs asking them to get using this sort of product. What industries are being most impacted for you?
Well, the nice thing about this technology is really horizontally very valuable for people who are writing documents, writing software code, doing analysis, doing strategy. So whether you're in healthcare or architecture or automotive, there are many companies that want to use this powerful technology to help their employees be more productive. And we've seen that with Microsoft 365 Copilot, where we've had companies like Chevron and others using it already and seeing great capabilities. And then with Bing Chat and Bing Chat Enterprise, where really every major company I talk to wants to be able to unlock the creativity power for their employees.
So if they'd once said, no, you can't use ChatGPT at work, suddenly they can say yes, but it's got to be the Bing Chat Enterprise. What's interesting, there's some really specific LLMs and generative AI being focused at different industries. I think of Harvey within the law world. Is that something that you're going to work alongside?
Yeah, it's a great question. The way I think about it is there'll be these foundational models. There'll be a couple in the world that'll be the most advanced. Things like OpenAI's ChatGPT or GPT that we work with, GPT-4, that power incredible capabilities. And then companies will take those foundational models and they'll do their own training. They'll do their own special capabilities for their applications. We'll enable those in Bing Chat for everybody through our plugin system. Think of it as like having skills in the AI. So that's kind of how it'll work.
Less than a minute left, but I've got to ask you, what do you think about the news that Apple's in on the game of generative AI with Ajax?
Well, you know, look, it's just such a hot area. People have to get after it. It doesn't surprise me that companies like Apple want to get in there. You know, we've been at it for multiple years. We have a very unique lead with ChatGPT-4, with our role in the enterprise, and you know, the excitement of people wanting to go do that work on Windows. And yesterday's announcements with support for Meta's Llama on Azure really speak to the unique leadership role that we're playing right now.
Love to have you back to talk about the open source models versus those more closed source foundational models. We thank you so much for your time there today. Microsoft Vice President of Modern Life and Devices company, that is Yusuf Mehdi of that group. From New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Ed Ludlow, he's off. He's missing the action when it comes to the publicly traded markets. Let's get into them because we've got another day of slight gains, up just about 0.1%. The moon music came from across the Atlantic when the UK's inflation number also ticked lower. Look, Europe's still not pulling back as much as we'd expected, but really the UK did plummet, and we saw therefore NASDAQ just managed to get a bit of a push higher as the world seems to be grappling with slightly less issues when it comes to inflationary push forward, and that means, of course, interest rates perhaps won't have to rise up at quite the rate we'd anticipated. The pound, look at that, down a percentage point versus the US dollar after that inflation data came in cooler than expected. But the Bloomberg Commodity Index maybe says, look, don't hold your horses on inflationary pressures. Oil spiking, wheat on the upper side. That, as we understand, that Russia is really not going to be wanting to see any sort of movement in terms of voyages in and out of the Ukraine at the moment. So keep an eye on the geopolitical risk there when it comes to commodities. Moving on, though, let's get back to this world of tech. Individual movers. The news coming from one Mark Gurman that Apple is now getting all in on the generative AI game. We understand Ajax is its foundational model that it's been trying to work with. We know that they already potentially have a ChatGPT-like model being used by employees. Apple GPT, it is up at a new record high at one point. We're at 195, up 2/3 of a percentage point. Microsoft, interestingly, having rallied hard yesterday after its own AI enterprise announcements. We were just talking about it with Yusuf Mehdi. We're seeing it just giving about a little bit of that profit, perhaps. We saw it down a percentage point, profit taking, and indeed, well, more competition to come. Keep an eye on those particular names. But now, well, let's go back to a company that was once public and now isn't. Bloomberg reporting today that after Elon Musk's Twitter acquisition and indeed the series of content policy changes that ensued, it's led to a dramatic spike in, well, hateful, violent, and indeed inaccurate posts on the platform, we understand. That's after the story's publication. We understand that Linda Yaccarino, the new CEO, tweeted calling, look, that researchers' findings are incorrect, they're misleading, and indeed they're outdated. How do we get this original research? Let's go through it all with Bloomberg's Sarah Fryer, who's been editing this story. And Sarah, ultimately, we've got not one, not two, but sort of 3 different research houses pointing to an uptick in hateful speech and inaccurate speech since Elon Musk took the company private.
Yes, even more than that cited in the story. This was really a broad survey of researchers from the Anti-Defamation League, the Center for Countering Digital Hate, Media Matters, universities across the board, looking at issues like anti-LGBT content, racist slurs against African Americans, anti-Semitic content, QAnon support, a number of different factors that, if you look at the numbers, all have gone up either in the last year or in the first few months after takeover. The dates range because these are separate organizations, right? They're not working together on this. But when you look at the full picture from these various organizations and what they've found, looking at the data on Twitter of what people are sharing, what hashtags are trending, what people are seeing, it doesn't paint a healthy picture of the platform. In fact, it is a huge challenge for the company to try to convince brands to spend their money on promotions there, given this reputation that the company has built. And one reason we did this story is just because we've been hearing for the last few months from brands saying, you know, I don't really know if I want to start spending again on Twitter. It's become kind of a cesspool. It's become dangerous. And we were a little skeptical, and we wanted to ask, you know, the third parties that have been looking at this, is that true? Have you seen this? What's the data? And this story is the result of looking at that data.
Let's go back to the woman who's got to lead about this change, convince marketers to come back with their money. It is one Linda Yaccarino, and as we're just showing some of her tweets in response to this particular article, in particular, she says, look, more than 99% of content users and advertisers, what they see on Twitter is healthy. Can you just go back to what they are currently doing internally at Twitter to try and right-size?
Well, I think that this is a very common line that you hear from social media platforms when they're called out for the harmful or violent or hateful content that is seen on their platforms. They say, well, look at the overall picture. You know, 99%, you know, very high percentage of tweets are good. Well, you know, that's sort of besides the general point that people are seeing these harmful posts and that the harmful posts are affecting the user experience. What I think Linda Yaccarino said that she's trying to do, and indeed what Elon Musk has said that he's trying to do, is go for this policy of freedom of speech, not reach. And not a new idea, but implemented at Twitter in such a way that the posts themselves may remain on the platform, but they're focused on reducing the reach of those posts and reducing how many people see them. And one big initiative from Yaccarino's camp is to try to improve the adjacency of those bad tweets to advertiser content and give advertisers the option to say, I don't want to show my company's tweets next to this kind of content. So, you know, we've heard from them that there's been some uptake on that offer, that some advertisers are signing up for it. From our sources internally, we've heard that. And I think that shows some progress, but it's like, as our story demonstrates, it's going to be a very long road ahead. Twitter is still down 50% in advertising since Musk took over, and they're still cash flow negative. So there's a lot of work to be done.
We'll keep an eye. We understand that in the next 2 weeks, they're going to be further expanding their ad placement controls to better support the growth of video consumption on the platform. Sarah Fryer, just great reporting across the board. Thank you for articulating all of the shifts going on when it comes to Twitter. And let's talk about the rest of the world of social media because, well, TikTok, we understand, isn't fully compliant with upcoming European Union rules governing content, surprisingly, according, of course, to the results of a test conducted by the bloc's governing body. Pleased to talk us through it is Alex Barinka. And boy, we were just hearing about the trials and tribulations of your Twitter. And of course, well, TikTok has long been on focus of the EU in particular because it's got to get ready for some new digital acts coming into place.
Absolutely. And to be clear, this is a voluntary stress test that happened on Monday that TikTok invited in the regulator who will be overseeing these new rules that go into play on September 1st and said, hey, take a look at what we're doing now. Take a look at our content moderation policies, our data privacy and sharing practices, how much illegal content we have or hopefully don't have. And the commissioner came out after that and said, TikTok, you're still not doing enough. More needs to be done to get you up to snuff, but the rules aren't in play yet. I will say, Caroline, this is a really interesting change in tone. The commissioner, Thierry Breton, actually had some words about TikTok in January, saying that the illegal, dangerous content on the platform was unacceptable. And this week, you see him actually applauding the social media platform for going through this voluntary test, for spending on improving the platform. So it's not quite a full thumbs up for the rules that will come into play in September. But, you know, it is an interesting kind of reveal of what to expect from TikTok, that they're perhaps inching closer, though they still have some more room to run.
That's such a good point, given, you know, the tough space that TikTok has been in the EU and the US, and many considering not only some of the content and the impacts on mental health and the like, but also ultimately its ownership, right? And I'm interested as to whether you think that's a pendulum that's shifting in any way.
Absolutely. And, you know, with the ownership, TikTok is owned by ByteDance. It's a Chinese company that has proliferated these concerns across, as you mentioned, the EU and the US, with questions of whether or not the Chinese government could unduly influence what you see on TikTok, the algorithm, because it has that Chinese ownership. Now, this DSA really has to do with content moderation. So absolutely, kind of the EU regulator looking under the hood and looking for any concerns around anything that's untoward definitely plays into that. TikTok is also doing something very similar called Project Clover in the EU that is doing here in the States under Project Texas. They're saying they're actually going to bring all of the data for users in the bloc to servers that exist in the EU to kind of cordon off or wall off any potential sensitive information from both their Chinese owner and any influence the Chinese government might have on ByteDance. So certainly this is an added pressure on TikTok that a lot of the other tech firms that do have to comply with these new EU regulations are not necessarily having to deal with.
Great analysis, Bloomberg's Alex Barinka. Thank you so much for bringing that story across the world when it comes to social media. Meanwhile, coming up, we're going around the world in terms of tech and art. The auction house, Christie's, is kicking off its Art and Tech Summit right here in New York. We'll discuss with the head of its venture arm about all things art, technology, and investing. That's next. This is Bloomberg Technology. Christie's Art and Tech Summit is back for its 7th edition now, highlighting the latest impact of AI, fintech, Web3, blockchain on the art world, as well as that intersection of luxury, fashion and tech, and much more to be discussed. Christie's, in fact, was the first auction house, if you remember, to register a sale on a blockchain platform. It wants to stay abreast of innovation in the art world, and one way of doing that is through its VC arm, Christie's Ventures. So today, the Venture Spotlight is all about Christie's Venture Global Head, Devang Thakur, who's joining us. And Devang, first and foremost, what is Christie's Ventures?
Caroline, thank you for having me. I think Christie's Ventures is our effort at trying to put our investments where our intent is. Right? We've been in the art world for 257 years. We've seen technology pass through these doors and doors across our 46 different offices for centuries. And we've had founders, creators, influencers tell us about everything they were building. That's deal flow. That's what venture capital is all about. And especially after the Beeple auction in 2021, we had everyone who was building anything sending us pitch decks, sending us information about how cool their product was versus all the other products. And I just thought that was the right moment for the first time in our history where Christie's was recognized as someone who was adopting technology at its very earliest stage. And so the venture capital arm allows us to capitalize on some of those deals and really invest in companies that come across our desk.
Well, I'm pretty sure post Beeple, Web3 became a really focal point, but we were just looking at some of your portfolio companies there, and there's also holographic technology. What are the other intersections that you feel really benefit Christie's?
Yeah, we have 4 pillars that we look at from Christie's Ventures' vantage point. One, as you mentioned, holograms. We look at hardware that helps people consume art better wherever they are in the globe. So holograms is a way we've replicated masterpiece objects like Degas and Giacometti's in photorealistic fashions in holograms. We looked at Web3, of course, that's around 10 to 15% of our portfolio, mostly focused on fundamental picks and shovels sort of investments. So you looked at a company that we work with called Manifold Technologies that helped us, Christie's, build our own on-chain auction platform that we use today. We're looking at AI and data because, again, with 300 years of being in business, we have tremendous amounts of data and knowledge that we can encapsulate. And finally, fintech. People think buy now, pay later is a huge innovation, which it is, but we've been doing that since the dawn of Christie's. Like, people do buy paintings and pay over time. So from the consumer point of view, we look at these 4 pillars and others as technology evolves around us.
What's so interesting, we go back to those heady days of 2021 when Beeple's NFT reached 69 million, and we all just sat up and sort of gasped. And now the world is very different. NFT prices have plummeted. You are all about creating value, continuing value. And when you see companies, interestingly, what Gucci's going to be at your event later today, the summit, how are brands thinking about Web3 and NFTs as something that isn't losing value but can actually build loyalty?
No, I think that's a great question. I think when people came about, I think the interest levels just skyrocketed. And I think over the last 6, 7, 9 months, they've sort of stabilized. Whether you look at the overall crypto ecosystem, things have stabilized at a level. Whether this is the new level or not, I'm not the expert at it. But in terms of brands, I think brands have found this as a new way to engage communities, whether it's the communities that follow artists, whether it's the communities that follow a certain tech trend. And I think brands have to keep themselves innovative as they have to sort of evolve themselves. They can't maintain status quo. So I think this technology specifically allows them to evolve with the trends in the market. And that's how I see brands using them. And I think this Gucci auction is an example where they're working directly with artists to curate a very fashion-forward sale called Future Frequencies, where artists are exploring generative art and generative AI and as it would apply to fashion. So I think the intersection is quite interesting there.
Let's talk about that, the generative AI element, because, well, there must also, as much as there's interest, there must be quite a bit of fear. We think of people worrying about copyright. We think about artists and authors and those that are creating ultimately worried about, well, the democratization of their workspace. How is this something that Christie's is thinking?
No, I think that's also a great question. I think the way I see it and the way we at Christie's see it is any new technologies is going to come with its sort of learning cycle. Right? It's going to come with its own sort of interest cycle, but then its learning cycle. So we see as our role being the sort of neutral party that brings together academics, regulators, artists, technologists, business leaders at this conference. Again, I'll do a plug for the conference. The reason we do this is because no one alone is going to solve any of these challenges, whether it's hallucination of AI or whether it's the ethics around using other people's sort of content. I think with AI specifically to your question, I see it as augmenting intelligence rather than artificially replacing intelligence. I think that's where I think improving the productivity of creators as well as other human beings is where I see AI fitting in. Yeah. And that's sort of the theme of the 2 days. Like, how does some of this technology apply to artists' lives?
Less than a minute left, Devang. The companies you invest in, where are they being built? How international are you?
Yeah, no, we have companies from Vancouver, Canada to Australia. So we're covering the entire spectrum of the globe.
Great to have some time with you. I'll catch up with you later. Devang Thakur, of course, Christie's Venture Global Head, talking about that key art and tech summit right here in New York. From New York, this is Bloomberg Technology.
Excited about bringing something new and fresh to the product on a global scale, and something that would allow me to take all my growth tech experience, and knowledge, and then have meaningful outcomes for global health.
CEO of WW earlier in the show, just discussing the steps they're taking to modernize Weight Watchers, the business. So let's stay in the world of health technology. Preventative health company Viome leverages artificial intelligence to obtain insights derived from unique microbiome as well as human gene expressions. Now, this is translated into health scores, personalized health recommendations for customers, we understand. Now, I'm pleased to say Naveen Jain, his Viome founder, once an early employee of Microsoft as well, has founded several companies. You come to us with Viome today, and what's so interesting is how microbiome as well as human gene expressions can be identified in an at-home test.
That's
so
right.
What is it that you're offering, and why is it different?
Well, first of all, Caroline, the care that, our health has been always delivered at the hospital. But I think the future of healthcare is going to be delivered at home, and the medicines of the futures are going to come from a farm, not a pharmacy. So what we do at Viome is give you an at-home test with a simple spit of your saliva, finger prick blood, and a touch of your stool. We're able to analyze everything that's happening in your gut, in your mouth, and all over your body, all the inflammation marker. We can tell you your biological age, your cognitive health, your heart health, your gut health, your oral health, and then we can tell you exactly what foods you should eat and why, what foods you should avoid and why. And what turns out that there is no such thing as universal healthy food. So many of us eat spinach and kale. We hate it, but we eat it because it's good for us. Well, it turns out half of us actually are harmed by that. So if you cannot digest oxalate, you should be eating spinach. And if you cannot digest, you have high sulfide production, then you should be eating broccoli or avocado if you have high uric acid production. So literally every person has a unique microbiome. 39 trillion living in our gut, 100 trillion all over our body, inside our mouth, inside our nose. These microbes work with us as human hosts, and we outsource many of the functions to them. So when we eat food, they digest the food for us, and in turn, they release the nutrients. Yeah. So what we do is, after you do at-home test, we tell you what's happening in the body, we tell you what foods are good for you, and these are not forever. Every 6 months when you do a retest, the foods that were bad for you. Yes. And by the way, it's like, people say, how long do I have to do that? It's like asking, well, I worked out about a year ago. Do I have to work out again?
Well, we know how much a gym subscription is. How much is one of your tests? And if you're doing it repeatedly over the 6 months?
So first of all, our cost just about, 5 years ago was $1,000. Now it has come down to $99, and we literally sell them at cost. So our tests, 3 of them, saliva, blood, and stool, all combined are for $299, right?
So if you're selling at cost, where is the money for you? I know that you're using artificial intelligence, for example, to drive the platform. Is it about economies of scale here?
So the 2 things is, first of all, is economies of scale, and secondly, the amount of information. So we have now collected over 750 trillion data points from 600,000 plus samples that allows us now to diagnose early stage cancer. So for example, with a spit of a tube, we can diagnose stage 1 cancer in your mouth or throat, and we received FDA breakthrough device designation for accelerated approval. That for stage 1 cancer, 90% sensitivity, 95% specificity. Never heard of it like that.
I've got 30 seconds, but I think of Pronuvo scans. It's all about how you deal with that from a mental perspective. How do you?
So first of all is that not only you get to know what's happening, but you're able to deal with it because we are measuring your gene expression, so we can tell you the foods. And by the way, we custom make the supplements for each individual. So we tell you what nutrients you need, and we literally make the powder and put them in a capsule and send it to you. So everything is made for you, made for your human biology. And everything you do, we have shown the efficacy that your depression, anxiety, acne, and all those things actually do get better.
It's individualized. Naveen Jain, all the energy, Viome founder. We thank him for joining us. That does it for this edition of Bloomberg Technology. you.